Welcome back. Let me go ahead and welcome in my special guest today. Mohit Mirchandani is Head of Equity at Taurus Mutual Fund. Mohit, great to have you on the show. Thanks for sparing the time. Let me start with, this big question in terms of an inflection point in the market. And the question everyone seems to be asking is, has the rally hit a ceiling? Are we not going to go upwards from here, at least in the near term?
I would think that's correct. In the short term, we've probably hit the ceiling. I suspect there might be a little more pressure on the markets up until the budget, and maybe even a little beyond that, depending on what unfolds at the budget. But I think I'd like to just break that up. We went to distressed valuations where we were trading at about 8 to 9 times. Those are typically bear market bottoms. That was one extreme. We've just had 13 weeks of an up move in an attempt to adjust and come back to fair value. I suspect that fair value is, I would say, 13 to 14 times, at best 15, in the early stages of a bull market. And that would actually put us in the region of 11.5 to maybe 13,500. So somewhere in this range, we will find fair value, depending on what multiple you're willing to assign and what your EPS estimates are. We closed, I think, at 14,500. So I think there is a little downside left before we hit fair value.
Okay, fair enough. And then the buying would re-emerge at those prices. Once again, those look reasonable. Mohit, going to get your take on monsoon and the fact that we have a monsoon now spelled out by the government authorities as well as below normal. Today, there was a knee-jerk response in some of these stocks, say from the auto space like Tata Motors or Hero Honda, and the FMCG space, which is directly linked to the rural consumption and spend. But overall, are you repositioning yourself, with this monsoon delay, and how would you expect more and more impact to come in onto the markets as well as the economy?
We would not be that hasty in adjusting the portfolios. Yes, monsoons might be below expectations, and so selectively a few names will be hit, even if it's marginally below, because food grain prices are already at reasonably high levels, and if it's an input cost for some of these players, they will be hit, and they've already taken a few rounds of price hikes. So I'm not sure there's room for more on that front. So selectively on the FMCG side, names will get affected, and we would be looking at readjusting in those spaces. On the automobile side, again, it gets very selective. A few companies which are largely dependent on rural India and the prosperity of rural India. If they have a good harvest, these companies stand to benefit. Those are the names we would, at least in the short term, trim our positions, because it will affect their quarterly numbers, at least over one or maybe even 2 quarters. So I would say it's not a blanket approach across FMCGs, staples and autos. It is a case-by-case situation. And yes, in some cases we will trim, in some cases we will exit, and in some cases we'll just stay put.
Also, Mohit, the Nifty's moved to free float methodology with effect from tomorrow. I know most of the adjustments have done, and it really affects index funds and not really actively managed funds. But nonetheless, the weightage of, say, ONGC gets reduced, PSU stocks get reduced. So in that sense, do you believe it's better news because most of the weightage is now linked to the float and linked to the tradability of public holding?
Yeah, I think this is a very good development for the market. It is fair. I think it's just a lot better, even from a fund management standpoint, that you have more, rather than market cap. You have the float out there, which is available for you, and then you can align your funds based on that. So I think this is a good move, definitely.
Mohit, do stay on with me. I'm just going to come back in a moment. Here are some of the other opinions. Street and my guest, Mohit Mirchandani, head of equity at Taurus Mutual Fund, is with me. Mohit, let's get to oil and gas, particularly, the numbers coming in from ONGC. A lot of analysts actually downgraded their targets, but more in terms of your strategic sense on where the sector is headed, because we are looking at hopefully some kind of deregulation, maybe not now in the 3 to 5 years. And we're looking at significant amount of gas pricing along with commodity prices globally, which are moving upwards.
I think oil and gas is one sector to be in if you're looking from a slightly, maybe even a year-long horizon. For a few reasons. One is, like you rightly said, there is definitely hope of deregulation, which should be good for the OMCs and ONGC and GAIL that share in the burden. We also have, in my opinion, crude, which should head higher over the next 12-18 months. That's again good in a way for ONGC, and it's also bad for them. But it really depends a lot on government regulation and how they play it, from passing on prices and the subsidy sharing burden. We also have gas, which I think is a major theme for India. We are finding a lot of it. We're building a distribution network across the country. It's just the pace of execution which could be a lot better. But I think that's a big theme for India. And so I'm actually quite optimistic on the sector as a whole. The caveat there being, you just do not know what's going to come out in terms of policy.
In terms of rates as well, what is your reading on the banking sector and the financial space right now, Mohit? Because inflation has been down again, minus this time around, and expectation is post-August it picks up. On the year end, of course, it's a reflation trade, so you're looking at anything between 4.5% to even maybe 5.5%. But how would you look at banks and financials in the current liquidity environment?
We are actually now looking at banks a little differently. We would prefer to play those banks which have a lot of embedded value in there, which have capital market related operations, mutual funds, insurance, brokerage arms, wealth management arms, because we generally believe the India story is back and alive, and we will go higher. The economy will be a lot better over the next 12, 18, 24 months. And so we're actually going to look with a lot more interest at those names that have other capital market related businesses in there. The plain vanilla lending business is okay. Everyone does it. It's just how you can scale up. You can get your operating leverage. You tweak around with your NIMs by just doing a little here and there. But I think the biggest delta will come from the capital market side of the business. So those banks that have exposure to that side is something we're taking a close look at.
Okay, so more niche offerings in that space. Mohit, a quick comment on your sectoral overweights and underweights right now at Taurus?
We are overweight infrastructure, financial services. We've tactically gone underweight on metals, but longer term we want to stay overweight on that as well.
Right. And on real estate, is there a call coming in there? Because Unitech, the numbers might have been down on the profitability full year front, but the commentary from the management seems to be a lot more positive. 20 million square feet of fresh new development, move to more residential housing, and even from the budget, the expectation of tax exemptions very much there on housing loans.
Real estate, while we believe the worst may either be over or will be over in the next 3-4 months, so we're very close to the bottom on real estate. However, as a theme, we prefer the low-cost housing, rural housing theme, and so we are actually scouting pretty hard to see which players have some kind of a leadership position or got into this space a lot earlier. If we do play realty, I think that's the route we'll take, the low-cost housing, and therefore, who benefits the most from that.
All right, Mohit Mirchandani, pleasure having you on the show with me. Thanks very much for sharing some of those insights. So does believe there's a little bit more downside, a mild one before valuations truly get fair. So you're looking at something around 14,000 in terms of the index. Sectoral overweights right now include infrastructure and financial services with a reversal in terms of metals position to. And today we saw lots of block deals happening in several of those stocks. Thanks for watching. That's it on D Street today. See you tomorrow at 9 with a brand new Nifty on the free float method.